Doing our Saturday research, one trading day left this week. On Monday, we're going to go over market analysis, take a look at all of our strategies in the All Strategy Access workspace list, volatility indicators, and portfolio analysis. If you're joining us for the first time, this is our portfolio calculator. It lists all of our strategies, and in this drop-down menu, you can look at different setups, combinations of strategies, and we're going to isolate what's working and what's not in this market environment. Very, very volatile. So on Wednesday, we transitioned our main portfolios, our 200K portfolio and our 50K portfolio, which have really been hit with this volatility. And we've transitioned those to the micro NQ20, along with the theme trade small or not at all. So we're trading micros in this environment with wild volatility. And here is the micro portfolio. This is a highlight of the week, a transitional week as we transition to this. It includes 20 micro Nasdaq strategies, and we're trading 1 unit per 50K in the 50K portfolio, and then 1 unit per 100K in the 200K portfolio. So 2 units in the 200K portfolio. Because the worst case drawdown since mid 2016, before 2016, it's a larger drawdown. We're in a different market environment right now. And from this point forward, the drawdowns are only about $4,000. And we've shown in previous videos how the market has changed since mid-2016, volatility and price levels. So micro portfolio, how is it done this week? We transitioned on Wednesday, and Wednesday was down. Thursday and Friday were up. The net gain since we transitioned on this setup is up. And so we're moving in the right direction. And the reason I like this setup is because it works this month, it works in 2020, and it works in 2021. You see, or 2020 and 2021 at 39K per micro. So if you're trading one Nasdaq, that's 390K. If you're trading one Nasdaq in 2021, that's 330,000 multiplied by 10. And so this year, it's worked in the previous 2 years. It's worked back to mid 2016, and it's working now. So I like to trade what's working now and what has worked in the past. What has worked now and is not working right now are certainly the commodity markets, a lot of our commodity markets. But our stock indexes are our strength, and I want to show you that, and specifically the Nasdaq. The Nasdaq is our strength, and I'm going to highlight that in this video, and then we're going to go over the All Strategy Access workspaces. This is the this includes all these workspaces at the bottom and over 120 strategies that we track each day and import into this calculator you see at the bottom. So you see this calculator, or this portfolio calculator. We import all the data right here. We use this formula. We have a formula that we use, and we copy all this data each day from all these algos into here, and then we look at different combinations and see what's working. We can filter it by market as well. So look at the 500K portfolio. It hit a worst case drawdown yesterday of 55K, which is about 10% on this setup that we just put together. We're not trading this. It's down 38K this month. We're not trading this setup right now. We put it together to look at in November. And if you just look at the stock indexes on this setup, it's in 29 out of 40K drawdown. So you see that drawdown curve. It's the worst drawdown since this time period. And let's look at it with just the Nasdaq. So if you just look at the Nasdaq, 23 out of 38. And what's it doing this month? It's down 12,925. It's down certainly our strength though, a normal drawdown for Nasdaq strategies in this modern day time period since 2016. So let's look at the 200K and the stock index portfolio and some of the others. And the 200K, the stock index portfolio right here, is just the ES and the Nasdaq anyway. So if we remove this one, we don't have to remove these others because it's not using those. If you remove this, it's down 11,000 out of 19,000. So the Nasdaq is certainly strong, minus 7,700. And you see the cyclical drawdown here. The rapidity of equity peaks decreases as you decrease the number of strategies. Only 8 strategies. So stock index portfolio 27 doesn't have a lot of strategies on the Nasdaq, just 8 on the Nasdaq and 19 on the E-mini S&P, 27 strategies. And this was developed, this setup was developed at the end of 2020, and we made one change in mid-2021. So look at the 200K portfolio. And you can see 38 out of 42K. What is the real culprit? Is the commodity markets have just been as sloppy as they can be. And we're going to look at that separately. I wanted to get this drawdown curve right here. We transitioned away from this on Wednesday to the micro portfolio. And let's look at just the stock indexes in this setup. It's in a 21 out of 32K drawdown. So looking at the drawdown curve, it's a worse drawdown in recent years since mid-2016, but not as bad as this one. But it's certainly in a drawdown even with the stock indexes. What about with just the Nasdaq? It's only in an $8,000 drawdown out of 26K. So the Nasdaq is a strength. The Nasdaq is certainly, these Nasdaq strategies are down on the month, but only down 1650. The Nasdaq strategy is only down 1650 in the 200K portfolio, so that's positive. That's what's working now and in the past. You can see that. And so we've taken that and run with that with our micro NQ portfolio. And let's look at the 50K portfolio. Is just our strengths have become our weakness this year in the 50K portfolio. This portfolio worked really well. It was working really well for us, and some of our top strategies are just performing poorly in this market. And it's a smaller portfolio. It's only 10 strategies. You only have 50K in that on regular futures contracts and E-minis. And so it's at a worst case drawdown, 19.5. It's doubled its worst case drawdown. And we transitioned away from that on Wednesday as well. And that was good. It's down 18,000 this month. We've transitioned to, like the last 3 days, we've transitioned to the micro portfolio, which is up I think it was about 1,000. The micro portfolio is up about 1,000, while this continued to go down 4,600. So a $5,600 difference from what we would have we stayed with this setup trading the 50K portfolio. And it's really, the top Nasdaq strategies underperforming, Cobra 3 is underperforming, and just a lot of our strategies that have worked really well are all of a sudden not working well in the future, and they're strategies that we've had for a while and they've been working, and then they just aren't working right now in this market. And so, a diverse group of strategies. What we found is a diverse group of strategies in the Nasdaq is what's working best right now. That's why we have the micro NQ20. And this is 1/10 of a Nasdaq. This is Nasdaq data with 1/10 multiplied by 10% to get the micro data. And so micros sometimes have different trades than minis. I'm going to show you that. We're trading this Cobra 2022 and the micro NQ portfolio. It lost on the E-mini, but it was profitable on the micro. So the micro outperformed the E-mini yesterday on this strategy. The profit target was just up here, and it hit that just on that bar. The micro traded one tick higher, hit the profit target, while the Nasdaq turned around and was stopped out on the E-mini. So let's look at some of the other portfolio setups. The micro portfolio aggressive. This hadn't been modified in about a year and 2 months, and it's 39.82 out of 54.58. It's down 24.98 on the month. This one trades gold, E-mini S&P, and E-mini Nasdaq, and you can see it's in a normal drawdown for the normal volatility that we've experienced the last couple of years. And so this one's held up on its worst case drawdown. Let's expand this. It trades S&P, Nasdaq, and gold. Let's get rid of gold and see how it would have done. It would have been 31.33 out of 54.58.50. You can see the setups that it trades. It trades 30 strategies. Let's look at the drawdown curve. So that's nice. That's actually really, you have an increase in volatility, obviously. And so this is could be a nice entry point for the aggressive Nasdaq micro without gold. Let's look at the last one, micro portfolio conservative. It's in a almost $2,000 drawdown now. It's pierced its worst case drawdown this week. Let's go down here and take a look. And let's look at let's break it down by market. Let's just get rid of these. And it's 1926.25 out of 2250. Let's see where it stands. So it's down here near this worst case drawdown. It's certainly been a challenging week, the volatility. Let's look at it with just the Nasdaq. Well, it's really good with just the Nasdaq. See, only 655 out of 734. The Nasdaq is our strength. And let's look at the monthly results and drawdown curve. It's only down 592.50. And the modern era of Nasdaq strategies is a normal drawdown, a good entry point. Let's look at the previous one with just the Nasdaq. We looked at it with just the Nasdaq and the S&P. The micro portfolio aggressive. 2778 out of 7,073. So the worst case drawdown went up if you have just the Nasdaq. And so here we go in the modern era since mid-2016. This is a normal drawdown. And so drawdown curves are holding up, and sometimes, and this micro NQ is up on the month. If we just focus on our 20 best combinations of micros, I developed this a couple of weeks ago. We started trading it this week, and it's up since we started trading it. It backtests well. It's not only up this month, it's backtests well back to mid-2016, and it only trades the Nasdaq. So those are the portfolio setups that I wanted to share with you. And let's fill this in right here. And this has been uploaded through Friday, January the 28th. Highly just recommend sticking with the Nasdaq and a combination of strategies related to the Nasdaq for trading. You see, it's up 4,000, be up 40,000 per Nasdaq, up 4,000 per micro, and so it's right in target with what it's done in the past, even in the midst of all this volatility. So let's take a look at the charts. All Strategy Access 1 ES. You see the SR counter trends had a mixture of winners and losers this week. Adaptive moving average is really aggressive. Let's take a look at adaptive moving average. 60-minute breakout was up yesterday as well. Adaptive moving average right here caught that winner into the close. Let's look at the performance summary. Would have been a good time to phase in on this strategy down here. Let's look at the drawdown curve or the equity curve. This one had a nice equity peak on the 25th, and then it got hit the last few days with chop. This is, if you go back further, this is just a very normal drawdown. This is a very abnormal winning streak since November through it had a 2-month massive winning streak with very little drawdown, and then it hit some drawdown 26th, 27th, and 28th. And so it could be a good entry point for adaptive moving average into the portfolio setup. And so let's look at some of the other strategies. Gold, we'll finish looking at the Nasdaq and look at gold and crude oil. Those markets are just have become very random, very difficult. So I'm not gonna go every single strategy. You can take a look here. You just kind of scan it and see the charts if you have the All Strategy Access. I'm going to highlight some. EVP1, great job catching that buy program into the close. Tick pullback. Let's look at some of the tick pulse. That one was one we traded in the micro setup. EVP1 is one that we traded in the micro setup to catch that into the close. We did the momentum reversal. Here is the VSD was one of our top strategies, and it struggled yesterday because the net volume was down. If you look at the net volume here it is on the ES. It's down on the day, even though the market was up 2.3%, 102 points in the S&P. So if you look at the let's look at the Nasdaq though, and it changes to the Nasdaq, and you'll see that it's down even more. So at NQ, this pops up on another window, and so the Nasdaq, the selling volume just stayed down. Rallied here, and then it rolled over, and then right down here. This is a classic. Looks like a classic Fibonacci pullback. Market rallies, pulls back, rallies again, but the point values are so much bigger than you're used to. It looks like a reversal, so it becomes like a head fake. But we had 4 strategies that captured this into the close yesterday, but the volume was still down. So not all strategies trade everything. We have strategies that trade price and buy programs and volume, and so we have a combination of strategies. And EVP1 captured that. Momentum reversal captured that trade. This was a great strategy to phase into this week. We did on the micros, and was tempted to add a full E-mini yesterday when it was down here. When it had entered the trade, it was about $300 from the stop loss. Had a brief moment of time where I noticed that. Then the market moved quickly. Would have been a good entry point because it was in a drawdown, and the current trade was a loser. And boom, it went to an equity peak on that one trade, up 8,700, and brand new equity peaks. Very cyclical drawdown curve since October of 2021. So we developed this back in this time frame, and have seen it go forward since. And we haven't traded it. We just started trading it with the micros this week. So these are the momentum reversals. Works on the ES as well, also at an equity peak. And you can see that here, equity peak and momentum reversal. And we traded this into the close yesterday. We traded momentum reversal. We traded, let's see, we had tick pullback as well. Tick pullback B. I'm messing with this today so it doesn't show up, but there's a tick pullback that ran into the close. And so let's quickly scan the rest of the markets, making a long video here. Soybeans, no trades. Euro currency, euro continues to drop against the dollar, dollar strong. Copper had a good day yesterday, got back in, got out here, got long again down here. Kind of like it when it does that, but I'm not trading copper, not trading silver and gold right now, or crude oil. Gold, you see gold we had this sloppy gold, and we tried to adjust it to with gold reversal, and now gold reversal is not doing well. The market just seems to morph into something that goes against whatever we're doing right now. So we're just taking a break from gold and crude oil. These markets just morph around what we're doing, to question what's going on in those markets when no matter what you do, the market just changes against it. So don't necessarily trust those markets right now, if you know what I mean. And here's natural gas, crude oil. You just have to question this kind of stuff. Get long here, market comes all the way back here, you get stopped out, and then it rallies again. That's just quite a bit. This strategy got in. Had some winners this week in crude oil. Some good trades in the crude oil, but overall it's a tough market. There's crude swing. So those are the trades on the All Strategy Access this past week. Our latest portfolio analysis you can download, so be sure to do that. And once again, the focus is on the Nasdaq and scaling from micros on up. If volatility decreases, if it increases, we scale down. Hey, David Bean here. Welcome to Capstone Trading Systems YouTube page. Be sure to subscribe to join our community of algorithmic traders. We are real money traders. We share our winning streaks, we share our losing streaks, as well as market updates, strategies, and coding tips.